March Madness is here, and no, we are not talking about basketball. The Denver real estate market is keeping pace with the sports seasons, and we are seeing some changes. Hey everybody, it's Alyson with Live South Denver, your real estate strategist and realtor for the South Denver area. Denver is breaking out of its slump for the real estate market. Let's jump right into the numbers and see what's going on. Buyers put 3,500 homes under contract in February. That's 8% fewer than this time last year. The good news is it was 300 more homes than where we started the year, which shows us the market is pushing back into play. We saw 2,700 closings in February. This is down 18% from February of a year ago, but it is up 33% from the month before. New listings were up 20% from the previous month to 3,300 new listings, but it is still off the mark from the previous year by 19%. We ended February with 3,800 homes for sale. It's 100 fewer than we ended January with, so we see that we're getting some traction in the market. There are fewer homes sitting there. However, those 3,800 homes are double what we had for inventory in February the 2 previous years. Those 3,800 homes put us at 1.4 months of inventory for the Denver market at the end of February. The average days on market went up by 2 days to 48 days. Stay tuned for my thoughts on that. Compared to last year, the average days on market is up by more than 2 weeks. The median days on market is just 26 days, which is down by 9 days from the previous month, but it is still up 4 days from where we were a year ago. All right, let's talk about where those prices are headed now that we're moving into February and March. The list price to sales price ratio in February was 96.4%, almost a 2% change from the previous month. We were at 94.5% the previous month. The average close price for all homes is $646,000, which is up $29,000 from the previous month. That's a change of 4.8%. Year over year, we are up almost 1% as well. The single family home price average is $721,000, also up $29,000 from the previous month. This one is still down about 2% from the previous year, but up about 4% from the previous month. $465,000 is the condo and townhome average price, up $21,000 from the previous month. This is up about 2.8% from last year and up almost 5% from the month before. Here's what it looks like when we switch over to those median home prices. The median sold price of all homes is $556,000 for February. This is up $21,000 from the month before, which is about a 4% change. However, the median home prices are still off the mark from the previous year by about 3%. The median single family home price is $600,000 flat. That's a $10,000 change in the upward direction from last month and about a 1.7% change from that previous month. This one is also off the mark from last year by about 5%. And condos and townhomes have a median sales price for February of $400,000. There is no change from a year ago. However, they are up $10,000 from the previous month, which is about a 2.5% change in sales price. All right, those are the month over month, year over year numbers. What are your takeaways? Month over month price drops appear to be over. Look at the price increases that we saw and how large they were month over month. These were not $5,000 price changes, $10,000 price changes. They were for median, but not for average. We were seeing $20,000+ price changes on average for homes going from January to February. The buyer demand is huge. So if you've been sitting and waiting to time the market, buyers, I think the bottom has passed you, and sellers, queue up. You might even be a little behind the 8 ball if you can't turn your house around on the market in the next 4 weeks or so. It is time to get moving. What about those average days on market? I said to stay tuned for my thoughts. All right, here's the deal. The homes that have been out there for a while are still sitting. And they are sitting, and they are sitting, and they are really stretching out the average days on market. Because did you notice how the median days on market dropped? And it dropped by a lot, by 9 days. In fact, if we look at the homes that are going pending, we find that the under contract homes have a median days on market of somewhere between 7 and 9 days. That means that buyers are snatching up all of the new, good-looking, fresh inventory. It's the stuff that's lingering that keeps pushing the average days on market up. Here's an example for you. I was out shopping with some clients the other day and we wanted to just pop in and see some things in different areas. They asked to look at a home that was not ugly, all right? This house is not a dog, but it has been on the market for 9 months. We are well over 200 days on market on this house that we went to see. This seller needs to reposition this home. It's not a hoarder house. It didn't smell like smoke. It wasn't horrible, but it's just not right after the feedback they've received. It does back to a busy road. It is quirky upstairs. The rooms are small. Each bathroom only has one sink. There are things that aren't right for the price where it's positioned at. 9 months on the market. So we are seeing things like that, and that's what's pushing these average days on market out. So when a seller is coming to market, positioning it right, being beautiful, knowing how you look against the competition will get you sold quickly. And that's why we're seeing median days on market so short and shortening. And to that point, I cannot help myself. Sellers, if you have a home that is not moving, 1, don't be stubborn if it's you. And 2, if you have an agent who does not have a plan to reposition your home, you might want to start interviewing other agents. Or do some homework and challenge your agent. Be the one who pushes forward to get your home repositioned to sell. There are several, actually many things you can do to give your home a fresh look in the market. So make sure you have a plan. There is no need for your house to linger for 9 months at all. If you're fine with it, okay, but most people aren't. You don't want people coming in and out of your house, 1 person a week, 3 people a month, and it's stigmatized. Buyers look at it and just go, well, there's a deal to be had. That's not the mindset you want. All right, I just couldn't help myself. I had to say that. Advocate for yourself. Get that house sold for top dollar. All right, we have covered how the price drops are ending. We have covered how buyers are active and the good stuff's getting snatched up. Before we move on to our week over week data, I want to quickly share this email I got from one of our builders. I stay in touch with builders on a consistent basis. In fact, some of them are sending me updates of all of their inventory weekly. Some of it's very personal. I'm not talking about those canned emails they send out. I have some personal touches where I'm getting information from them on a weekly basis. So this was one of those personal emails from the builder. He says this: "Hey Alyson, we've raised base prices, raised lot premiums, and increased option prices. We are pulling back our incentive dollars and rates are now 4.99 instead of 4.875. So that's not where rates are, but the lender buys them down with the incentive dollars. Unfortunately, moving in the wrong direction for your clients, period, they missed the bottom." So I think this is something that is true, and we're seeing all the builders push in this direction. This particular builder feels very bullish about the market. They followed up in another email and said that for the last many months, they have eaten up about 1/4 of the new construction share of the market. They feel very confident. All right, let's jump into this week over week data. Let's pair that up with some of this monthly data I shared, even the comments from the builder, and let's see if you think we really have hit the bottom, because if you are trying to time the market, you better not wait anymore. You may have missed your window. All right, we're picking up where we left off in the last market update. So this is weekly data heading into the week of Super Bowl. That week we saw an 11% decline in showing activity. We saw a 12% decline in homes going under contract. And because most of us agents have had experience around what a big weekend that is for people to stay home and gather with friends, there was a 5% decline in new listings. However, what we know is that no matter what's going on in the world, serious buyers are serious buyers. For homes between $1 and $2 million that weekend, the median days on market was 6 to 6.5 days. The next week was the week leading into President's Day weekend. We had back-to-back holidays this year in February. Showings picked up 9% from the weekend before. And while this sounds great, we typically see a 25% increase after Super Bowl weekend. So it was certainly a little slower than we would normally see coming out of a big holiday weekend like that. Our listing activity, so new listings, picked up by 10%, and a huge chunk of those were snapped up right away. Under contracts went up by 4% that same week. We're also seeing our odds of selling come back on par with historical levels. So the odds of selling is a statistic that takes into account active inventory versus what has gone under contract or closed in the previous week. We do this on a rolling weekly basis. Pre-pandemic, because it's nice to have something to compare to before all the craziness, right? The highest the odds of selling statistic ever was measured at was 61%. The week heading into President's Day, that statistic came in at 61.4%. Now, during the pandemic, by the way, odds of selling was getting up into like 80, 85, crazy amounts, but it didn't stay there all the time. But we certainly far surpassed the 61% range. So that's why we're looking well before that to see things back when our world was normal. The week after President's Day, new inventory went up another 6%, but it was not enough to offset all of the buyer demand that surged back into the market after these holidays. Under contracts went up by 9% that week. And we saw about a third of the properties go into a multiple offer situation as well. And the over $1 million market is still shining. Under contracts there went up by more than 35%. Inventory in that segment dropped below 1.2 months. The odds of selling in that segment increased to 56% odds of selling. That's a boost of 7%. And their median days to sell for a home in that 1 to 2 million range is holding steady at 6 days. Reflecting on February as a whole, we saw 28% of single family homes sold over list price. Their average amount over list price was 3%. You can see the week over week data is supporting the monthly data in terms of where we're headed with pricing, where prices are going. We're in a compression phase where our buyers and the buyer demand is outpacing our inventory and what sellers are willing to deliver up. We are seriously in a lock-in effect where sellers are looking at mortgage rates and what it looks like to let go of a 2 3/4 interest rate and turn around and buy in a market where rates are pushing 7. I actually had some clients the other day call and say, our house feels a little cramped, it's fine, but we want something bigger. And then really talk through what it would look like for them to get rid of their rate that's below 3. And they said, never mind, we'll just do some work on this one and stay put for a while. And that's the reality of where sellers are. It takes a huge motivating factor to get them over the rate they're in to jump into this market. Buyers, not so much. There are more first-time buyers. There are more people that are relocating. There are more people who took a huge job. That's their motivator. But the sellers who are here in Colorado that have no major reason are comfortable. That's why our inventory is so tight. So this compression cycle looks like it's here to stay for a while. Historically, it lasts for us all the way through April and tends to loosen up a little bit in May. We'll see if that's the case, as we're still seeing rates that are pretty comfortable in the high 6s right now. The season to get top dollar for your home in Colorado is by selling between February and April. That means listing your home between February and April and closing before May and early June. So sellers, if you're pondering, now is certainly the time. Of course, we haven't had a normal cycle and year since the pandemic started, so you can absolutely throw caution to the wind and just test and see what happens. Buyers, if the market's going to follow a fairly normal trajectory, the earlier you can get in this year, the better you're going to do and avoid bidding wars. I have so many buyers, I've said this before in my market update, who are looking toward April and May timeframe, and I know I'm not the only agent who has that. So we are anticipating a much tighter market come early summer, late spring. So if you have the opportunity to buy now, it's going to benefit you most certainly. The one thing we haven't discussed much is rates, right? They're really not much of a conversation point with buyers right now. It seems to be they've kind of just taken it as a cost of buying, a cost of doing business. Sellers, one thing I will mention to you, make sure your agent understands loan level price adjustments. It's something your agent needs to have conversations with the other lenders, the buyer's lenders, to make sure that the buyer is really well qualified, has been through multiple layers of vetting. You understand the nuances of the buyers. Otherwise, there's just not a lot to talk about in the rate department. And when there is, I will follow up with you guys. Buyers, if you have been waiting to time the market, it looks like the bottom may have found you. If the timing is right for you, it may be your time to step in and start looking. As always, thank you so much for catching up on the market with me. If selling or buying are on your horizon, we can catch up in a more personal way, voice to voice, over Zoom, over email. I'm always delighted to chat with you, and I will see y'all next week.